All right, it's great to have you with us this morning. And as we were mentioning, looks like we'll see a cautious start to the trading day. Yesterday was very interesting, wasn't it? The unstoppable technology stocks all of a sudden were stopped in their tracks, in part based on some concerns about whether or not the AI success stories we keep talking about are going to be as successful as the market had been predicted. But maybe it's just the fact that we've been trading around all-time highs. We're entering into a bit of a quiet zone here as most earnings stories have come towards us. And I want to get some more perspective on the current state of the markets with Brianne Gardner. She's Senior Wealth Manager at Velocity Investment Partners with Raymond James. Great to have you with us, Brianne, as always. I wonder, the sell-off that we saw in tech yesterday, what was your takeaway on that? Was that overdue, or was it a sign that maybe people are starting to change their opinions on where they want to be invested?
Yeah, thanks for having me as always, John. For me, yes, we did see a little bit of sell-off, as you mentioned, especially led by the Nasdaq. We saw the Nasdaq pull back almost 1.5%. So yes, we saw tech a little bit under pressure. Nvidia, Meta, and even AI plays like Planter that you mentioned were hit a little bit harder than normal. And that was kind of, people were wondering, was that a loss of leadership to set the tone? I think we are seeing a little bit of rotation in focus, growth and momentum, names sold off. Well, we did see some money rotate into cyclicals and value. I think Home Depot, that just reported as well, was a good example. Despite even a small earnings miss, improving trends and steady guidance really supported the stock. So for us, we don't see this as panic selling by any means. We wouldn't be surprised to see, and as you mentioned, headed into seasonal weakness, a 5 to even 9% pullback right now with where valuations are. But investors, I think, are positioned more cautiously a little bit ahead of Powell's Jackson Hole speech, which is something that we are certainly have on our radar and will be watching closely. But September historically underperforms. We've seen an average pullback of about 1.2%. And it's only month with long-term negative average returns. So historically the weakest month out of all of them. And even though the Nasdaq also struggles historically in September, that is something that we will be watching. Will this pullback in tech continue through, the later half of August into September, as some valuations are a little stretched and remain that seasonal window on the calendar. So really, sentiment is still rising, but yes.
Yeah, it's really interesting in the sense that we're inundated with information more so than we've probably ever been for people who are tracking the markets. And I've spoken to a lot of people recently who are preparing for a possible pullback, but almost ready to look through that. I guess the bigger question is, since we've been in a bull market, do you think the bull case is still intact?
Yeah, I do think the bull case is still intact and we are still bullish on the market. I think, we're closely monitoring the economic data, and I do think that is something that is going to continue to be crucial on the direction of the market and the path of interest rates as well. So for us, especially if we're looking at the S&P 500, it does typically do well post-election years. Stocks will see a pullback, we believe, in the next, I think, again, September, October, probably. So taking profits isn't a bad time for investors to be doing that. That's what I'm thinking. I'm not saying you need to sell out of the market by any means, but it's not a bad time. We've had a nice run up, especially since that April pullback. The market's up almost 30%. And now we're starting to see odds of a rate cut increase, especially out of the US, a little bit toggling back and forth, going from lower to 100 to now around that 87% of the September cut. But I think expectations have continued to be a little uncertain, and the market doesn't like uncertainty, and we've learned that time and time again. So for us, I think we have been raising some cash by taking profits and looking at selection of some companies that have maybe pulled back, where we want to reallocate that capital but continue to stay, in the market and stay invested.
Okay, I want to talk to you about some of the ways you are investing in a second, but just briefly before we get to that, because we've got this high-profile Jay Powell speech, it's going to be his last from Jackson Hole this year, so I don't know if he's going to sort of put a little bit of pageantry in that. But the idea of a Fed interest rate cut in September. As an investor, you said you're looking towards that. What is it you're looking for? That the economy is navigating inflation well enough that a rate cut is warranted, but we're not seeing a massive slowdown? Like, what's the investor take you're looking for when it comes to a rate move?
Yeah, as you mentioned, while inflation is easing, I think producer prices and service inflation remains a little bit sticky, which is something that we're watching. Companies may start passing those higher costs to consumers to protect their margins. So again, we will watch that. I think Powell may not give 100% direct signal, but his tone will certainly shape how investors lean into the fall season. So the Fed has sat on rates all year, and from expectations in January to where we are now. And I think a little bit of that was fear of inflation rising due to tariffs. But the rise has been modest that we've seen so far. And that's really been defying kind of fears of an elevated increase. So I think in spite of the Fed's really repeated concerns regarding inflation, they are still projected 2 rate cuts this year. So presumably by 25 basis points each, or 50 basis points total. But there's only 3 more meetings left in this year again. So investors need to be aware. We have September, October, and December.
Right.
And then that would appear that 2 of those 3 could result in rate cuts.
Brianne, you always give us some investing ideas. So we're almost out of time, but there's a few different stocks in different areas that you flagged for our producing team. Names like Visa and payments, IBM, a long-time technology play, but also still looking at areas like gold. Is there sort of a thematically, when you think about where to put capital right now, is there an overarching theme?
Honestly, I think it's a little bit more of being selective, making sure that you are I see right now where we are in the business cycle, profitability of companies, looking at, we have seen earnings beat, and that's important. If we are watching companies and we have on our buy list, if they did miss or there was expectations for lighter revenue going forward, and we do see it unheard of sell-off, we will be picking up those stocks. So we're looking at management, we're looking at share buybacks, we're looking at dividend increases. Again, I think quality is going to be the key here. IBM, we did a great pickup there. Visa, I think, is going to continue to do well. I still see upside in gold, in Motorola as well, raised their full year guidance, and also did impressive business there and earnings growth. So I think, again, overall, it's a little bit more of a selective opportunity for investors right now.
Some great food for thought as always. Brianne, thanks very much. Nice to see you. Brianne Gardner joining us remotely. She's Senior Wealth Manager at Velocity Investment Partners with Raymond